Well, that is it for Palantir, as they have announced that they are officially going to leave the New York Stock Exchange to join the Nasdaq. And on the back of this announcement, the stock price has shot up over 11% in a single trading day. So today we're going to discuss what this move actually means for Palantir, as well as their recent earnings announcement and how that means a lot more for where the stock and where the company is headed in the future. Before we get into all of that, I appreciate all the support on the channel over the course of the last month. If you are enjoying these videos, do not forget to subscribe down below and leave a like. I really appreciate it, and thank you so much for watching. Before we jump into all of that on Palantir, let's take a look at the YouTube account. Right now it's sitting at a value of $57,092.65, very close to its all-time highs, which were around $57,300. And really there are two main stocks that have made major moves in this portfolio over the last month and resulted in a lot of these gains. In the portfolio, we have Alibaba 15 shares, Google 5 shares, Apple 4 shares, Microsoft 1 share, Palantir 100 shares, PayPal 10 shares, SoFi 200 shares, and Visa 3 shares. The two main stocks though that have moved up significantly in the last month are SoFi and Palantir. Palantir is now definitively our #1 gaining position, up over 600%. And you can see that our cost basis on this position is $930.66. That means we paid about $9.30 per share, and currently the market value of this position is $6,577. I also have a couple of dividend ETFs in this portfolio, SCHD and VYM. Potentially will look to get out of these if the market takes a dip and I find good opportunities in the market, but I also have cash on the sidelines of around $12,500. But let's take a deeper look at Palantir specifically, because here today alone the stock moved up over 11%, and it gets even crazier when you look back to their earnings, because before earnings they were trading around $41 per share, and the stock moved up after earnings almost 60%, now trading over $65 per share. And so far this has been an incredible year for Palantir. Year to date the stock is up almost 300%, and overall this year has been incredible for Palantir. They have not only performed excellently in their metrics, but they have also had a number of different factors outside of the business that have impacted the stock price. One of those being a move back in September of this year when they were included in the S&P 500. This actually caused the stock price to go up by over 14% in a matter of a couple of trading days. And now fast forward to November 15th. Palantir has announced that they are going to move from the New York Stock Exchange to the Nasdaq, and this has caused the stock price to spike by over 11% in a single trading day. And this move is planned to take place on November 26th. But why is this so important to investors? It comes down to the same importance that we saw with the S&P 500 index inclusion. When Palantir was included into the S&P 500, that forced a lot of ETFs that were based around the S&P 500 to actually buy into Palantir's stock, which drove up the stock price. And Palantir is hoping that something similar will happen with them being included in the Nasdaq, as they could potentially get added to the Nasdaq 100 index. This would result in Palantir being added to the 5th largest ETF in the world, QQQ, which currently has an assets under management of $318 billion and the 2nd largest daily trading volume, only behind the S&P 500's SPY. So overall, new money coming into Palantir is going to be a good thing for the stock price going up over time. The other big benefit of being added to the Nasdaq is around super investors. Super investors are often looking at these larger companies that are included in indexes, so it adds a little bit more legitimacy to potentially attracting some of these super investors to buy into these stocks. However, keep in mind that everything we've talked about so far are short-term metrics. One of my favorite quotes in the market is from Benjamin Graham. In the short term, the stock market is a voting machine. In the long term, it is a weighing machine, and the weight of a machine is determined by their earnings. Palantir announced their earnings back on November 4th, and they came through with an EPS of 10 cents, which beat analyst expectations by 10%, which is relatively small because they were only expecting 9 cents, so it is only a 1 cent beat, keep that in mind. But revenue came through and also beat by 3.1%, reporting $725.52 million for the quarter. And Palantir's CEO Alex Karp released the following statement along along with their earnings. We absolutely eviscerated this quarter, driven by unrelenting AI demand that won't slow down. This is a US-driven AI revolution that has taken hold. The world will be divided between AI haves and AI have-nots. At Palantir, we plan to power the winners. This is obviously a very bold statement from CEO Alex Karp, but what stands out to me the most is the statement here around AI demand not slowing down. That is critical because oftentimes these earnings announcements are occurring 1 month into the next quarter. What this likely means is that Palantir is still seeing unprecedented demand for their technology even into the fourth quarter. And this is on top of the already high demand that they are seeing. Their revenue year over year grew by 30%. It was up from $558 million in Q3 of 2023 to $726 million in Q3 of 2024. But what's very interesting about this 30% growth is where exactly it's coming from. A lot of investors have anticipated strong US commercial revenue growth, and that has shown through in this quarter. They grew year over year by 54% in this category from $116 million to $179 million. But on top of this growth, they are seeing a re-acceleration of their US government revenue. It grew 40% year over year from $229 million in Q3 of 2023 to $320 million in Q3 of 2024. And when we compare that growth rate to Q2 numbers, in Q2, they were only able to grow their US government revenue by 24%. So they have seen their year over year growth increase by 16% quarter over quarter. And this US government revenue is continually being driven by the US military. This is a great business for Palantir to be in because the US military budget is always expanding. And they recently signed a 5-year deal for up to $100 million to expand their Maven smart system. Top line growth is one thing, but you also want to see solid bottom line growth. And right now, GAAP net income for Palantir, it didn't grow as much as the previous quarter. However, it still is up to $143.5 million. Again, in the previous quarter, we saw a jump from $105 million up to $134 million, which was very significant. We've only seen a slight increase this quarter. However, it's still good to see this top line growth that I believe will eventually fuel stronger bottom line growth. There are a couple of reasons that I think Palantir will see strong bottom line growth in the near future. One of those being the rule of 40. Remember, the rule of 40 is used for software companies to evaluate how strong the business actually is. It looks at their revenue growth as well as their margins. And right now, Palantir is putting up a 30% revenue growth year over year, and their margins are sitting around 38%. That results in a rule of 40 of 68%. That is up from a quarter ago when they had 64% and from a year ago where they only had 46%. And right now, Palantir is really balancing these two metrics. They are seeing solid revenue growth, which means that they are still a growth-focused company. However, they are also seeing solid margin growth. A year ago, their margins were only 29%. They have increased these by almost 10% to 38% most recently. Over time, I think that these margins should continue to expand because as Palantir starts working with more and more commercial customers, as well as even government customers, they build out their software and their AI knowledge base. Once they have built this out and these technologies out, it is going to be more easy for them to implement similar technologies at other businesses for lower costs. If Palantir's numbers weren't good enough for investors, they also came through and provided some excellent guidance. For the fourth quarter, they are expecting revenue to come in between $767 and $771 million. For the full year, they increased their revenue guidance from $2.75 billion to $2.8 billion. Previously, they expected that US commercial revenue would increase by only 47% year over year. However, they are now anticipating it to reach at least 50% growth year over year. Adjusted net income, they also bumped up, and adjusted free cash flow went from around $900 million to in excess of $1 billion. And right now, analysts for the full year have an average EPS estimate of 38 cents with a high of 41 cents and a low of 34 cents. This compares to a year ago when Palantir put up 25 cents of EPS. Right now, price targets are relatively low because they are still at an average of $37 per share. And the current stock price is $65 per share. Oftentimes when stocks run up this fast, like in Palantir's case, it's hard for analysts to really adjust their price targets in a meaningful way in that short of a time period. However, we may not even see analysts adjust their price targets because based off 2025 EPS numbers of 47 cents per share, that puts Palantir's current valuation in terms of forward PE ratio around a 140, which is relatively high compared to the Nasdaq 100's forward PE ratio of 31 and the S&P 500's PE ratio of around 24.6. For me personally, I'm not looking to sell out of Palantir. I think there's plenty of growth in front of this company, and the fact that Alex Karp sounds very confident about this next quarter of earnings, I think is just going to build into Palantir and their hype. There is obviously the potential with a high valuation of around 140 that the stock either trades down or potentially even just trades sideways for a couple of years as they catch up to this valuation metric. But right now, I think Palantir is a good stock to hold on to. Maybe not necessarily one to buy into just because of the elevated valuation, but I think it is a solid hold to see what happens over the next couple of years. But as I always say, don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, remember to drop a like down below and subscribe for more videos like this one. And as always, have a wonderful rest of your day. And for the joke of the day, what's a math teacher's favorite Thanksgiving dish? Check the comments down below for the answer. Thanks for watching.